Tariffs, rates, and more. Oh my, yes, this is what we're talking about with our good friend and mortgage broker, Mr. Dion Beg, right after this. Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
I'm good, man. I think I'm a little warmer than you. How cold is it?
Yeah, it's in the minus 20s here in Canada, and we're not happy about it. We are not happy. I tell
At least
you
you're
what,
in Kelowna. At least you're in Kelowna.
At least I'm in Kelowna. And many Canadians would say it doesn't matter. We feel warm as a country. We're all connected and united.
Man, I still remember when I moved to Canada, nearly 15 plus years ago, and it got to 1 degree, and everybody was outside in shorts. I'm like, what is going on in this country? So my long pants are on until it hits a good 20 degrees.
I got my long pants on. I like it. I always like the guy or the girl, I don't care, it doesn't matter who. They're out shoveling snow. They got their big jacket on, their boots on, and shorts.
And the shorts. Yeah, right.
We've all seen that person.
Yeah. Okay. No, yeah, I've seen them for sure.
Yeah. I guess we got to talk about our market here, Dion, and there's so much news, and of course, you can't turn around without hearing what our crazy cousins are doing to the south of us. And that's a blanket statement, what the leader of that country is doing, because we all have friends and family that live in the States, and we love them to death, but there's some weird things happening coming from that leader.
And I don't know what ketchup to put on my chips anymore, Gary. I'm at a loss.
Yeah.
That's the headline right now. What to buy at the supermarket, right?
Well, that's just it, right? Everyone's checking labels and things like that. And I hate to say it, but it is the truth. There's always opportunity and chaos, and there's good things that come out of this stuff too, right? When you have news like this and people kind of bonding and banding together and buying more, we'll call it local or Canadian. It is interesting times, and we can dive deep, but we're gonna live on the surface on this one because there's actual market news that you and I can talk about, but
there's too much to talk about. We're going to talk about some stuff, not all of it.
That's right.
Yeah.
Here's what we know. We know as of today, February 5th, when we are recording this and posting this, that tariffs are not set, at least put it on hold, the pause button, for another almost 30 days now. So we'll see how that happens. I can tell you, Dion, though, over the weekend, the Canadian dollar was taking a bit of a hit, and as soon as it was announced on Tuesday that the tariffs were on pause, the Canadian dollar had a bit of a rebound. So if that tells you anything, it should tell you that the currency traders will say want Canada as a sovereign country and want them separated from the U.S. That should actually say a lot.
Yeah, and I mean, it just also goes to show that you don't actually have to have things happen in the market. It's just a rumor of the idea of something happening in the market, which impacts things such as foreign exchange or the bond yields, which we'll take a look at today.
Yeah, exactly. So Dan and I don't need to beat or I don't know what we're going to beat. We don't need to talk about it because everyone and their brother is talking about it. And quite frankly, neither he or I are immensely versed in I don't think anybody is, quite frankly. These are new times. But what we can tell you is what's happening in our own businesses and how, Dion, how you're educating your clients now. So let's talk about, you sent me some charts here. Let's dive into some of the charts and walk us through there. I know last week we talked about home ownership and the home ownership rates and some of the big box stores. Let's talk about the one Canadian big box store, and we'll set that up and go from there.
Yeah, for sure. So I think every Canadian at some point in the last 12 months has crossed the threshold of this store.
Here we go. Hang on, bring it up. That's something
not
different.
That
We're coming to that. To that. Canadian Tire. There we go. We'll get
Canadian
there.
Tire. Okay. Well, let me ask you, Gary. When was the last time you set foot in a Canadian Tire?
Yeah, probably about a week ago.
Probably about a week ago.
Yeah,
Okay. The
definitely
thing about
monthly.
the interesting thing about Canadian Tire is we don't go there to buy bread and milk. It's not a grocery store. It's a store where generally we go for discretionary spending. The things that I remember buying at Canadian Tire are my kids' skates and a new Christmas tree, things like that, right? And so these are things that you don't need, but they're things that you will go and buy. And therefore, Canadian Tire is a really good barometer for how consumers are spending their discretionary spending, like the stuff that's beyond just the necessities of life. And as you can see from this chart, guys, in 2020 and 2021, when we were at COVID times and everything was booming, Canadian Tire was also booming. But when those interest rates started to jack up, then that's when households were robbed of their consumer spending, discretionary spending in particular, and that money that they would normally spend at a place like Canadian Tire had to be put towards the mortgage because their payments were up. And so that's where you see this massive drop off in end of 22, all of 23, and all of 24. And so this is just a really clean snapshot of what's going on in Canadian households and in the psyche of consumers. It's like, I'm not spending more money than I need to be spending at this time, right? So that's what's going on. I don't know if when you went to Canadian Tire, Gary, was the parking lot full or half full?
It's a good question. These are things I don't recall. And it'll be interesting too, Dion, not to go back to the tariffs or anything like that, but we are seeing an immediate surge in shopping awareness of where people are shopping and buying things from. So it'll be interesting. Just because it says Canadian Tire, do Canadians start going there as opposed to some of the Costco's of the world or Home Depot as an example, right? It'll be interesting to see.
Sure. Yeah. I mean, and that's a different conversation as it relates to the patriotism that the country will feel in coming together over the next little while. But what you're seeing on screen here happened well and truly before any mention of tariffs or anything like that. This was just what was going on in the Canadian economy in the last couple of years. And I think this is not news to anybody. If you're watching this on screen, it's basically capturing how you have been feeling, how your neighbors have been feeling over the last couple of years.
Yeah, exactly. Okay, the next slide in comparison to this, or to help talk about this, is the GDP. So let me bring that up and talk us through this one.
Right. So, guys, oftentimes in the newspaper you see GDP, and what you've seen historically is GDP growing quarter over quarter. Just this week, we had our first published GDP reduction. That is, we didn't grow. We had a loss of 0.2%, I think it was. But the more important graph that I think that we should really take note of, which isn't pushed out there by the government because it's not pretty, is GDP per capita. And so what you can see here is a massive divergence from a general historic, lockstep with the US in that, if they're doing well, we're doing well. And since around 2014-ish, you can see a divergence where the US economy per capita has been productive and the Canadian economy per capita has become unproductive. That's then led to just, again, the previous slide, which is where we don't have as much money in our pocket as our southern neighbors. And so this is what has had this impact on consumer spending and that hand-in-hand reduction in the GDP per capita. And again, like we've spoken about this, Gary, we've had 3 million people move to Canada in the last 3 years. That's really pushed up the GDP number, but that dilutes the GDP per capita number, right? And that's what you're seeing on screen here.
That's a good point. And remember that 3 million, we only had approximately 40 million to begin with, 38 million. So again, that number really skews what we're seeing here on the per capita side. That's a great point. Okay, let's talk about the rates and where we're seeing where we've come from, as you can quickly see here on the screen. But why is this important, especially in the timing of where we are right now?
Yeah, so basically what you again on screen here at that low dip there, 2021, 2022, that's when interest rates, guys, were super low. I can remember arranging a mortgage for a client at an interest rate of, Gary, wait for it, 0.99% on a high ratio variable. Okay.
That's crazy.
That was at the absolute bottom of the market. And that, unfortunately, that same interest rate would have jacked to close to 6% in the years that followed as the Bank of Canada pushed rates higher. And so that blue line is where interest rates have been over the last couple of years and approximately where we are hovering around, which is at around that low fours number. And so the fact of the matter is the majority of mortgages in Canada go on a 5-year term. So if you got a mortgage in the year 2020, then this year 2025 you are up for renewal. And many buyers came into the market in 2020 and 2021, meaning 25 and 26 are when they all come to maturity. And yes, you're going to see a huge jump for many people who were, and I'll be honest, I didn't get many fixed interest rates, Gary, close to the 1% number. It was closer to the 2% number. But yeah, you're looking at a jump from around 2% to around 4%. Okay. And that translates to a big increase in payments. And about 40% of people who got those low rates have already renewed. We haven't seen a huge foreclosure, which was predicted, right? When these payments jumped. But there are still about 60% of Canadian homeowners who are set to renew in the next 2 years. And so what this chart is showing is if you're renewing today, you need to kind of brace for about a 40% increase. The hope is that this blue line ticks a little bit under the 4% number, which I think is realistic based on everything else that's going on in the market. And that pain is a little bit less. But again, with what is going on in the States, there's a high chance that this blue line could take a big dip, meaning interest rates could be a lot lower than 4% in the year ahead.
Yeah. Well, you touched on an interesting point there. We don't know what's going on in the States, and it's almost changing daily. And I saw an article where some people are asking for an emergency Bank of Canada interest rate announcement. So not to say that that's going to happen, my friends, but that's that knee-jerk reaction that the public gets. And of course, the Bank of Canada, say what you will. I think Dion, they'll probably stick to their regular announcement
meeting
dates.
schedule.
Exactly.
Yeah, so the next meeting scheduled for March 12th. Okay, and so we're basically just a little over 4 weeks out. And an emergency meeting would mean they would have a meeting before the March 12th date. And trust me, if that was to happen, that is basically broadcasting to the nation that we're in a state of emergency as it relates to, our trade and other things. But yes, it's anybody's guess at this moment, Gary. But I wouldn't be surprised, if we've got a 30-day reprieve, so maybe it kind of lines up with a March 12th schedule, meaning they may not feel the need for it today, whereas maybe on Monday they did feel it.
Yeah, it's a good point. That's a good point. And we're seeing other articles and things come out where it's been mentioned that we're looking at creating other free trade opportunities with other countries throughout the world. So the next 30 days could be quite interesting for Canada and its economy. Well, it will be for its economy. Okay, staying with in residential real estate or we can never really predict the rates as we're just talking about right now, but we can get a decent barometer of where we think we're going with the rates, and that's of course with our bond yield. So let me bring up that slide that I teased everybody with earlier. Okay, walk us through what we're looking at. And take it from there, Dion.
Okay, so what you have on screen here is the 5-year bond yield. Put simply, this is what major bank economists use to predict where interest rates should be in the future. Okay, and this relates specifically to fixed rates, not variable rates. So I want to point out that if you look to the start or the left of the screen there, you see that our bond yields were up around close to 4%. There was a period of time, I think it was in 2023, Gary, where we were over 4%. But you can see now, guys, that we are hovering around 2.6-ish, right? And so things are going on a downward trajectory, again, because of everything that's happening in the global economy, especially with our southern neighbors. And so, what this predicts is that in addition to the variable rates, which are controlled by the Bank of Canada, the bond yields are saying that the fixed rates could also take a significant downward slide in the couple of months ahead of us.
And Dion,
Okay.
I like looking at this too from a year's perspective, which is a snapshot today. But and I'm sure we all remember, if we go back to this will date us back to pre 2008. You can see, history should be a good teacher. And you had a great point when I mentioned that offline. History didn't have a leader like they do in the States right now. But with all that said, if we were climbing at that 3.9 or over 4% there, as you mentioned, the last time we were there was that 2008 cycle, and you can see quite clearly here those rates fell and then remained down for quite several years, in fact.
Yeah, that's right. So, I mean, if history does repeat, then it's not unimaginable that rates, could dip quite a bit more. And it's funny for us to be speaking in these terms right now, Gary, because if you were asked just 12 months ago, do you think that we could see interest rates at 3% on a fixed rate? I think the answer from both of us would be probably not in our lifetime. But in our lifetime, did we predict a second Trump presidency? Probably we didn't predict that either, right?
Yeah, fair enough. Okay,
Yeah.
so there's obviously a lot of stuff happening within the market, a lot of stuff happening with, intention to purchase, and homes go up for sale every day, my friends. And what's happening right now, and we'll get the data for you over the next couple of weeks, is the Toronto Real Estate Board is hosting their annual market watch. And with that, and I've seen some of the information come out, and they go through what their predictions are, and they're stating a prediction of a slight increase in sales year over year, which makes sense to me. And also, Dion, you sent me another slide, and let's bring that up about.
Yeah, it's about intention to purchase
Yeah.
from both existing homeowners and people who are currently renting and becoming a first-time buyer. So, in both of these categories, that green bar represents the expected intention of people in the year 2025. Based on a survey done in Q4 2024. So you're seeing about a 20% increase in buyer intention in both categories. And again, this comes down to the idea that Canadians had been waiting for a period of stability and belief that interest rates were in fact going to be down and remain down. By the end of last year, we had reached that point where Canadians felt, you know what, last couple of years have been absolutely crazy, but now I feel confident enough that the year ahead will be one in which I can make a big purchase with confidence. So this was Q4 now. Has the events of the last couple of weeks impacted those people? It'd be interesting to go and speak to those exact same people today in February 25 and see how they're feeling and if there's any change there. But if there isn't, then what we could expect is a 20% uplift in transaction expectation this year.
What I can tell you, and this is more of an anecdotal comment. I don't have the stats in front of me to validate this, but what we are seeing and what we're hearing from our agents is in that, we'll call it the 416 area code, so like that Toronto area. And if this should always be an early sign to a market change, if you will, or where we're going in the market. And what we're getting early reports on in the last week or two, even over last week's crazy announcements, homes that have been sitting on the market are selling. And in some cases, we're having multiple offers on these homes. So don't go out and Gare said we're having multiple offers. No, on some of them, and we're seeing that inventory, that cycle that's been now on the market for 4 or 5, even 6 months. We're seeing that being consumed.
Oh wow! So there've been days on market, 100 days plus, and now they're actually selling.
We're seeing that early movement, and that ripple effects takes sometimes a month or two to get out to those, the Durham area, the York Region area, Peel area. But what happens typically in that 416 area takes about a month or two to ripple out to those other areas. So again, this is early indications. It's only been about a week or two, but from all intents purposes, and our agents are reporting the same thing. We should see just a nice little bump in the sales from that perspective. Now, if you're a seller, don't assume that you're going to be listing a house and getting multiple offers. It all has to do with your pricing strategy and marketing strategy and everything around that. And of course, what is your competition? But as I said, we are seeing just a slight little bump in sales, which will feel like a lot because we haven't seen it for a while, right? So just
anecdotally, one of my buyers missed out on a townhouse this week at the 790 price point because there were multiple offers and the other offer was stronger. So, I can see it in my business as well.
There you have it, my friend. So, Dion, there's so much we could dive deep on. There's many other videos where we have and things are changing so rapidly with the Canadian economy and what's going on south of the border and really worldwide. What we do know is our own businesses and how to educate and talk to our clients that way. As we wrap up here, what are some things that people should be looking out for when it comes to selecting the appropriate mortgage for themselves?
Yeah, well, I mean, just in the past week, I've arranged fixed rate mortgages and variable rate mortgages. It is not a one size fits all solution. But what I can say is that right now people are skewing towards that variable rate just because of the things we discussed about the potential for further rate drops. Every week, we're talking to people who are in a fixed rate and figuring out whether we should break that mortgage, pay a penalty, and transition over to a variable rate. So we're helping people with that as well. And another example, I have a lady who's about to retire and she wanted predictability in her mortgage going forward. So we got her a low fixed rate, but it's not as low as the variable rates will likely be in the next couple of months. But she made that decision because that allowed her to sleep at night, right? So, when it comes to which mortgage to take, it's very much a consultation where we figure out what's important to you today and over the next 5 years of your life.
Excellent stuff. Remind us how to get a hold of you, Dion.
Yeah, kangamortgage.ca or Instagram at the Dion Beg.
There you have it. That's the Dion Beg. I'm Gary McGowan. We'll see everybody in the next episode. Goodbye for now.